The American economy is on shaky ground. Warning signs are flashing. Inflation is stubbornly high, exceeding the Federal Reserve's target. Consumer debt is soaring, fueled by credit card spending, auto loans, and mortgages. Job openings are declining, hinting at a potential slowdown in hiring. The stock market, a barometer of economic health, is struggling. The S&P 500 is in negative territory for the year. These troubling indicators suggest that the much-feared R-word recession is no longer a distant possibility. Adding to the economic anxiety is the specter of rising interest rates. The Federal Reserve, tasked with keeping inflation in check, has already raised rates several times this year. Further hikes are anticipated, potentially slowing down economic growth. The housing market, a key driver of the U.S. economy, is also facing headwinds. Mortgage rates, hovering near 7%, are making homeownership increasingly unattainable for many Americans. The combination of these factors, high inflation, rising interest rates, and a cooling housing market, creates a perfect storm for an economic downturn. Consumer confidence is waning, and businesses are hesitant to invest. The question is no longer if a recession will hit, but when. At the heart of this gathering economic storm is the contentious issue of tariffs. President Trump, in his second stint in the Oval Office, has reinstated his signature protectionist trade policies. Tariffs, essentially taxes on imported goods, have been slapped on a range of products from Canada, Mexico, and China. These tariffs are presented as a way to protect American jobs and industries. However, critics argue they are doing more harm than good, fueling inflation and hurting American businesses and consumers. The tariffs on Canadian and Mexican imports, currently at a hefty 25%, have driven up the cost of essential goods. Everything from automobiles to lumber has become more expensive, squeezing American households. The tariffs on Chinese goods, while lower at 10%, are also having a ripple effect throughout the economy. China is a major supplier of manufactured goods, and the tariffs have disrupted supply chains and raised prices for businesses and consumers alike. The economic fallout from these tariffs is already being felt. American businesses, forced to pay more for imported goods, are passing those costs along to consumers in the form of higher prices. This has contributed to the surge in inflation, eroding consumer purchasing power. Moreover, the tariffs have sparked retaliatory measures from trading partners, further harming American businesses that rely on exports. As the U.S. economy grapples with the consequences of tariffs and the specter of recession, a key question arises. Is China emerging as the beneficiary of America's economic woes? China, the world's second-largest economy, has been steadily expanding its global influence. Its Belt and Road Initiative, a massive infrastructure project, aims to connect Asia, Europe, and Africa, enhancing China's economic and geopolitical clout. While it's too early to declare China the outright winner in a hypothetical U.S. economic downturn, there's no doubt that Beijing is strategically positioning itself to capitalize on global shifts in power. China has been actively courting trading partners sidelined by Trump's protectionist policies. It has also been investing heavily in emerging technologies, such as artificial intelligence and 5G, areas where the U.S., once the undisputed leader, is facing stiff competition. The ongoing trade war between the U.S. and China, far from benefiting American workers as promised, has created uncertainty and instability in the global economy. It has also given China an opportunity to position itself as a more reliable and predictable trading partner, potentially chipping away at America's long-held economic dominance. The confluence of these factors, a teetering U.S. economy, the self-inflicted wounds of tariffs, and China's ascendance, has raised alarm bells among economists and policymakers alike. The specter of a recession looms large, threatening to upend the fragile economic recovery. A stock market crash, while not a certainty, is a distinct possibility, as investors grow increasingly wary of the uncertain economic outlook. Adding fuel to the fire is the political circus surrounding President Trump and his tumultuous second term. His controversial policies, including the tariffs, have deepened partisan divisions and created an atmosphere of uncertainty and unpredictability. Calls for his resignation, while unlikely to succeed, reflect the growing frustration and disillusionment among some segments of the American public. The situation is fluid and complex, with no easy answers. What is clear, however, is that the stakes are high. The decisions made in the coming months will have far-reaching consequences, not just for the U.S. economy, but for the global order as a whole.